Hi, everyone. Just want to give people a little bit of time to get in here. If anyone is having any technical issues or, they can't hear me or see the screen, please write it in the chat. Just going to give everyone about another 30 seconds to a minute to join. All right. Well, welcome to Ensure Your Client's Exemption Certificate Portfolio is Compliant with Automation. I'm Zach from the Earmark team. And just as a reminder, you can earn CPE for this webinar by using the Earmark mobile app. Just download the app by scanning the QR code on your screen or search for Earmark on the App Store or Google Play Store. Unlike traditional webinars, Earmark does not use polling questions during the presentation. Instead, you will verify your learning by taking a short quiz. Once the quiz is available, we will notify you via email. You can then use the app to earn your CPE certificate. So once again, don't worry about polling questions or attendance checks today. Just enjoy the webinar and look out for an email in the next few days to earn your CPE. So without further ado, I want to welcome our instructors, Eric Carrasco and Maria Tringali.
Hi, everyone. It's great to be here to talk about exemption certificates. It's definitely an area of sales tax compliance that's really important to really have a good grasp on and understand. So our title today is Ensuring Your Client's Exemption Certificate Portfolio is Compliant with Automation. So first and foremost, my name is Eric Carrasco. I am a Senior Product Marketing Manager here at Avalara. I lead the Comp Intel team and practice rather here in the organization. I actually joined Avalara back in 2022. I was a sales tax consultant actually for a number of years. I worked at a firm called PMBA. And during my time at PMBA, I solely focused on indirect tax, and especially in the sales and use tax side. It was a very important thing in my job as a consultant, helping businesses navigate the complexities of sales and use tax through audit defense, liability mitigations, different things like that, due diligence. So it was a lot of fun. I enjoyed it for a number of years. Decided Avalara was a great organization with great technology, and I can leverage a lot of my sales and use tax knowledge to continue my career. So here I am at Avalara.
Hello, everyone.
Maria. Sorry,
hello, everyone. Thanks, Eric. Great to be here. So my name is Maria Tringali. My title at Avalara is a Senior Solutions Consultant, which what that means is I basically help our prospective customers, or salespeople, and a lot of people around the organization understand certain things about tax compliance. And one of the things that I specialize in is the exemption certificate management process, as well as businesses that don't charge a lot of retail sales tax. So looking forward to chatting with you about one of my favorite subjects today, Eric.
Yeah, absolutely. No, it's great talking about this. It's an area that really is so important that's easy to overlook, right? So talking about certificates, and today's agenda will be today's compliance landscape for tax exempt sales, the 4 biggest challenges for tax exempt sellers, best practices for getting and staying compliant, and Q&A. If anyone's around to talk and ask questions, we'll be here to answer those. All right, so getting sales tax right. So it's really important that as you manage compliance, you know where your business must collect and remit sales tax. You register to collect and remit the sales tax, and you collect, validate, and maintain accurate certificates, right? So collecting the correct sales tax amount when needed, and reporting and remitting it to the right taxing authority. So anyway, I simplified a lot when it comes to sales and use tax. I mean, this is kind of like the general idea of compliance when it comes to sales and use tax, but we're going to get into a little more nitty gritty, especially around certificate management, what we'll focus on most of the conversation on. But it's also just important to talk about just other things like Nexus and how that affects you and your requirements for certificate management. So first and foremost, I want to talk about the tax exempt landscape. It's a little bit complicated because there's generally 2 ways that states define what's taxable and what's exempt. Really, there's 2 methods, right? It's the general taxable rule, and that's kind of the way that states, they specify what's taxable, and anything outside of that will be exempt. And then there's a general exempt rule where they say that it's the opposite approach, and it's when exempts, which essentially defines specifically what's exempt, and everything else essentially is taxable. So anyway, I think I said that right. It's a little bit confusing, but there's two different ways as far as how states ultimately define it, right? It's either going to be exempt and it's written out as exempt, or it's going to be taxable and written out as taxable. Anyway, it's a general idea behind that. So there's a little bit different though when you use a little bit of a curveball when it comes to exemption certificates, because it works a little bit outside of that, right? So even if a transaction is taxable, though there could be a situation where the actual customer or the way they're going to use it is exempt. We talk about that as the buyer or the business having a certain status, like a nonprofit, like a charity, religious organization, educational, government, federal, state agencies, or the way they're actually going to use the product or services makes that transaction exempt, right? And that can be merchandise that's made for resale, or the products are going to be used in the manufacturing process, or agricultural. Maybe there's an maybe the organization is they're going to use it in an agricultural way, and there's some rules around that where they're able to apply an exemption. So a few different examples there, but the general idea to think about this is there's two ways in which an exemption certificate can be applied, and basically is the actual organization exempt in some type of way, or they're going to use it in some type of exempt way. And that's where exemption certificates come in. So kind of talking about that whole general taxable rule and general exempt rule, right? Products can be exempt from sales tax. And these are kind of some scenarios when a product itself or a service itself can be exempt or can be taxable. And in situations like this is not where you would use a certificate. It's just that the state regulations deem these transactions or these sales or the services as being exempt or as being taxable. All right, so understanding tax exempt sales. So, Nexus is a really important factor when talking about exemption certificates because it really comes into play, right? Because if you don't have Nexus in a state, then there's really no reason for you to comply in that state for sales tax regulations, including collecting exemption certificates, right? But if you do, then you do have to comply and you do have to collect certificates in those situations, in those scenarios where the product is taxable or the service is taxable, but the organization is exempt, or it's going to be used in an exempt type of manner, like we talked about, manufacturing, resale, and those are definitely the two more common scenarios. So I guess you have to ask yourself a couple of questions here, right? So is the product actually taxable or the service actually taxable? And if yes, is the customer exempt from tax due to their business status or the way they're going to use it? And if so, this is when you need to start collecting certificates in those states where you have Nexus. So here's an example of the resale exemption certificate and how it's used in an auto supply chain. So right now you see everything from the components manufacturer all the way down. These are different organizations, right? From the actual in an auto supply chain where there's the manufacturer that's actually creating the components that ends up selling it to the parts manufacturer, that ends up selling it to the car manufacturer, that uses it and creates something else to ultimately create the actual car, and the car picks it up, buys it, and then they send it to or they sell it to the end user or the consumer or business is actually going to use. And that's the important part right there. That's where the taxable purchase is made and the car dealership has to collect sales tax. But what about every other organization in the process? Well, they each have to collect an exemption certificate, a resale certificate from each other, right? From the component manufacturer has to collect one from the parts manufacturer. The parts manufacturer has to collect one from the car manufacturer they sell to, so on and so forth, all the way down to the car dealership. So you can kind of see how this ends up working and why these organizations are not ultimately paying sales tax. The sales tax is being collected at the very end there by the end buyer or the consumer, who's going to be the person actually purchasing the vehicle. All right. So talking about burden of proof. So certificates are really important because at the end of the day, the burden of proof is on you, the actual seller, in an audit. You have to produce those exemption certificates. You have to show that you've actually collected it and the transaction was actually exempt to the customer you sold it to. So it's really important because if you don't have those documents in order, if you actually don't collect them, or they're expired, or they're not filled out correctly, or it's just the wrong one, that comes down on you and not the person or not the company or organization you were selling to. And that comes with all sorts of fun things like fines, penalties, and a historical look back as well. It's not just a short 1 year look back. A lot of states, depending if you're registered or not, 3 year look back, it can even extend to longer than that, especially if you're not registered. So that's years of sales tax you owe on top of penalties and interest. So talking about challenges, right? So Nexus is a big deal, and Nexus is a big deal. We're talking about certificate management. So first and foremost, what is Nexus? Nexus is simply the connection between a seller and a state that requires the seller, the business organization, to register and collect and remit sales tax for that state, or prove why you don't have to. So certain business activities, including having physical presence or reaching a certain sales threshold, may establish nexus with the state, right? So in other words, having inventory, having some type of physical activity in the state, going into the state to do deliveries with your own personal trucks, employees, obviously, business presence like that is a physical way. Now, that's not the only way. We're talking about also a new way called economic nexus, right? So prior to 2018, it was strictly physical. Wherever you had physical presence, you would have the requirement to register and collect and file for that state's sales tax regulations. Well, come 2018, that changed completely. So after 2018, the South Dakota v. Wayfair, this essentially required businesses to start complying for their out-of-state sales tax obligations. So for other states where they may have obligations based on their sales activity in that state. So you can be a remote seller, you can be selling digital goods, you may have no physical presence at all. But because of the amount of activity you had in that state, due to sales revenue or transaction volume or both, you create that requirement, that nexus, that obligation to start collecting and complying in that state's sales tax regulations. And not only that, but each state has different varieties as far as the type of thresholds that they have, right? For the most part, you see this $100,000 or 200 transactions threshold in a calendar year. Some states say the previous 4 quarters, some states the previous 12 months. So it's really funny. Each state's going to be really specific on how they address that threshold and when you cross it and when you should collect it. And other ones have different thresholds as well. Some just don't. Some have done away completely with that 200 transactions, as you can see here in these states: Pennsylvania, Kansas, Colorado. Some of the examples there. Some have a higher tier as far as the amount of revenue they expect in a year, 12-month period, blah blah, previous 4 quarters, as far as how much sales activity you had. So $500,000 you see there for California, New York, and Texas. And there's a couple there that do not have economic nexus laws, but that's I think those are just going to be all the states that just don't have sales tax anyway. So, and then you have weird situations like Connecticut where it's $100,000 and 200 retail transactions. New York is $500,000 and 100 transactions. It's a little bit different there in New York as well, because you still have the transaction threshold, but it's reaching the amount of dollar threshold and the amount of transaction threshold at 100 for them. Not only that, it gets extra complicated when we're talking about the states that include exempt sales and thresholds. So not only do states have the thresholds you have to consider, but you also have to consider, does that include exempt sales? And if so, what types of exempt sales? Because not every state covers, even the states that say you don't have to include your exempt sales in your thresholds, they may still have certain specifications. They may say, well, don't look at your exempt sales that are resale, but everything else we care about. And there are certain states that say that. So it's also important to kind of investigate that and be 100% sure as far as how that state defines their exempt sales for economic nexus rules. So that creates this obligation where sellers have to register in more states than ever, right? You have economic nexus, you have this obligation. That means you actually have to go through the registration process. So now with that comes along having to comply for collecting and collecting your exemption certificates from the customers. So this is where things get complicated, because you have a lot of businesses that might not have major obligations for Nexus or major obligations across states to collect certificates. Now you have situations like a small manufacturer in New York that 99% of the sales are to other manufacturers, resellers, and the Wayfair ruling increased that burden. Where previously they might have had to just collect 75 certificates, now they have to collect thousands across their sellers, across their purchasers, right? Then you have situations where a national wholesaler also, is in that same boat. So no matter what this business size, it really affects businesses I would say somewhat equally. Obviously, the bigger you are, the more obligation you have, but the smaller business you are, the less process you may have in place to actually handle that type of volume. So as far as certificates, they come in all sorts of flavors. These are examples of a few different ones that exist, right? You have direct pay permits, which are special types of permissions you get from states that allow you to not collect sales tax, or not pay the sales tax to your sellers, because the obligation is between you and the state to remit that tax on a periodic basis. So that's direct pay. There's other ones that are resale certificates, going to be the most common ones. And even with those, though, sometimes it's really funny because they may have certain obligations. They may have a basic form you can just follow online that has the actual resale certificate, or the state may say you can't actually use any of your forms. We have to actually give you that form. It's a specific form that we give to you that you can then sell. You can provide to those that you are purchasing from. So, there's different. The states handle them differently. Sometimes they're as simple as a handful of forms. Sometimes they have I don't know, tens, I want to say 20, 30 different types of forms, depending on the way you're going to initiate the purchase and the way you're going to use it, or what organization you are that is able to use that certificate. So the other thing to keep in mind across certificates is there's different things you have to track. It's not just tracking the actual and collecting your certificate, but it's also making sure it's signed. Is it the right certificate? Is it filled out correctly? Are the right boxes checked off? And also, does it have an expiration date? Because many of these certificates actually do have expiration dates, and it depends on the type of certificate as well. And you can kind of see, here's an example here, right? You have, let's just say, Maryland resale, never expires, but the manufacturing expires after 5 years. So, each one of these are going to have different ways. Each state's going to have different ways in which they require you to collect, manage, and track the certificates. And it's really important that all these things are lined up, because if they're not lined up, well, in an audit, that's kind of where you get hit. So the question becomes, are current processes scalable, right? So what are you currently doing for your business or your client's business? Is it just tracking on an Excel, paper copies in a drawer somewhere, an accounting system where you're saving images? It really becomes a major burden. And honestly, it's a major resource drain when you're tracking hundreds or you're tracking thousands of certificates, and you get any of those wrong, it can create a big, long historical obligation depending on the impact of that particular customer. So I'll have Maria take it away talking about the customer experience.
Awesome. Thank you, Eric. So just the documents, I'm a little, Google-eyed just listening to you talk about the complexity of the actual documents. So, and as I dive into talking about how important the customer experience is, there's something I want you to remember is that most of your clients, most businesses you sell to buyers that want to be tax exempt, feel like they're good at collecting them. There's all these things that Eric just talked about are related to making sure that you have the right form for the right reason and that it's valid, and what the challenges can be. Everybody that I talk to, and as you heard earlier, I've been around for almost 10 years here at Avalara, and businesses tell me, oh, we do a good job. We collected this form when we signed up the customer. So let's talk about why that's not everything. There's so much more to it. And one thing is, customer experience is important. Customers feel burdened by being asked to provide documentation. No one likes delays in placing an order. We put, we have an internal customer and an external customer. Nobody likes if you bill them wrong, if we had the wrong form, if we have to go ask for one later. So we want to make it super easy for customers to buy from you. And one of my colleagues going to coin this phrase in the orange here that says, managing exemption certificates right is managing your customers well. And it's so true. Make it super easy for them to buy from you. If you don't, they're going to go buy from somebody else. And billing problems can often end up in social media. They can't do it right. I don't like it. My bill is incorrect. But those are things that are important to a customer. So we want to make sure we're doing that right. And a lot of businesses that I talk to aren't even thinking of that. We're making these customers jump through hoops just to buy from us. And remember that our internal customer is just as important. So our credit managers, our salespeople, our people at the front line who are trying to collect these certificates as they're making a sale or starting a job or creating an invoice, they don't know anything about tax compliance. They're just trying to do their job and they're just trying to collect something. We don't want to create delays in orders being processed or sales being closed, or again, incorrect invoices. Credits and rebills are just as painful internally as they are externally. So we want to think about what it takes just to collect them and make sure we're doing a good job and making sure that that is going smoothly. One would think that it's the buyer's responsibility to provide me with valid documentation so I don't have to think about it. I have a lot of businesses, CFOs, that tell me this. Well, it's their responsibility to provide me with the right form. I don't really care what it is. As Eric just pointed out, the burden of proof is on the seller, not the buyer. So it is the buyer's responsibility to make sure they have the right form. So why make this hard on the team? There's no way that your credit manager who's collecting these things knows every rule that Eric just showed, every expiration date, every rule, every type of form, direct pay permits, all those things that he mentioned. And it is the seller that gets audited, and it's also the money out of your pocket if it's not accurate. So it is a two-way street. So customer service internally and externally is really important and not something that your clients often think about. So I recommend talking with them about making this process easier and smarter. The next challenge that I see every day in my life is everyone is selling in multiple channels now, especially in the B2B world. Those customers that manufacture things like on the chain that Eric was talking through earlier, a manufacturer, a distributor, they are adding websites for adding a B2C component. Just talked with one yesterday. Or we have a B2B component, but we want to allow our B2B buyers, to buy online. We're starting a direct to consumer. We're starting a private website with special pricing. We are going into a new market. We're launching a new product. We're launching a new initiative. So everyone is trying to be creative. We have to make sure that we can collect these exemption certificates across all of our channels, not something that your clients think about a lot. They only think about, oh, our credit manager collects that over here in a corner. But you have to think about the fact that you're going to market in multiple ways, and you need to make it easy for that customer to provide you with a certificate, whether they're in e-commerce, in a shopping cart, or they're logged in, add to their account on the website, or you're creating a new customer portal, or you're doing business in the traditional ways, such as email, phone, even direct mail, however you take orders, or in the field. You want to make it easy to collect the right certificate at the point of purchase, let that sale go through, and everybody knows that you're compliant. Because this is the way of the world. This is where everyone is going. Now I'm going to send this back to Eric. Eric used to work for a consulting firm. He has actually handled sales tax audits, and I like to call sales tax audits. I like to talk what we're talking about today. Avoiding sales tax audit is avoiding liability. You are the seller. You're the responsibility to collect from the buyer and pass it to the state. So if your clients do this right, there won't be any liability. But let's talk about if you're not doing it right and you do get audited, Eric.
No, that's a great point, Maria. Yeah, I mean, obviously, if you're doing it right, then you don't have a lot to really fear, right? If you're collecting the certificates, your tax is correct, you have a great tax engine in place where everything is being collected correctly and remitted correctly, it's great. Unfortunately, because sales tax is as complicated as it is, and we talked about Nexus, right, and the amount of exposure that can create as well, and just having bunch of new states where you have to register and that you have no familiarity in or no real knowledge in, it can become really easy to fall out of that compliance. So for the most part, when it comes to sales tax audits, though, audits, they typically target these, what do we say, have 4 industries here: manufacturing, construction, wholesale and distributors, retail. These are the major industries that auditors like to target. I've seen a lot of other ones in restaurant and bev alc type industries as well. I mean, it can get really complicated. The more complex the sales tax, the easier it is for an auditor to go do an audit and find issues and find errors, right? And the types of errors they find are going to be the Nexus oversights we talked about, the exemption management document errors, and misreporting use tax, right? The tax that you actually have to make sure that you're paying for your purchases. So, and I've been on the other side of the audit defense, and I will say that when it comes to exemption certificates, it definitely is an area that auditors spend a lot of time on, because they know it's not as simple as just having the certificate. They want to make sure that you actually collect the certificate at the time of the sale, right? Or did you collect the certificate maybe a week ago when the transaction happened 2-3 years ago? Now, there are certain things that maybe some auditors you work with or the state understandings where they can kind of be lenient, but there have been cases, and actually not too long ago, recent case in California, where the actual or the auditor, it didn't really matter that the certificate was collected not too long ago or it was a fresh certificate. The issue was that they did not collect it back when the actual sale took place, and ended up coming a huge issue. It went through audit defense, went through different levels on the states. It went through different levels in the own states sales tax boards to try to see if they can fight that liability. It ended up actually coming to fruition where they end up having to pay the amount of tax that they should have collected. They said that they should have collected that certificate at the time of the sale and not, when they got audited. And that's kind of the issue. Is sometimes you can go back and get the certificates, and sometimes the states will say actually no, or the auditor will say no, you should have collected that and verified that long before when that sale was made. So definitely an area that auditors like to focus on is certificates. And the types of red flags that they go through are, what they see as red flags are those sales that you're making that do not actually show sales tax, or they're seeing that your purchases you're making don't have sales tax. That's also another red flag. Or a lot of activity, a lot of type of, one thing actually that's in the next slide I find so interesting when it comes to sales tax audits is when it comes to what auditors target, right? Because we have a few different things we listed here, Maria. We said one of your customers audited, and that's definitely a common way. If your customer got audited and they see that they have purchases they made from you and your business or your client's business, and they're seeing no sales tax on it or incorrect rates or whatever, they'll see you as a good candidate for an audit. They may also see that maybe you are collecting, but it's a lot of transactions, a lot of sales. Well, they want to see if you're doing it correctly for the rest of the customers you have in the state, and they may go and audit you as well. But one thing I like here you put is you hit it big, and everyone is talking about it. That's definitely an experience I have seen, and I've actually seen situations where states go, I can't prove this, don't know, don't quote me on this. I've seen it where I believe that a state may communicate with a different state and say, maybe somebody's getting audited for sales tax in one state, there's success in that state, maybe there'll be success in a different state. And I've seen that happen back to back in different states, in Texas, New York, California, Washington, Florida are kind of the big ones I've seen that happen back-to-back audits for different clients. And when I see that, it's definitely very worrying, because it's like, well, there's definitely some communication here. And there's actually situations where maybe the actual company made it big. And I think that's kind of the point that I was trying to get to on that one is I've been in an audit where a company had multiple mergers and acquisitions over a 10-year period. They were selling digital goods. They didn't think they were taxable at all. I don't know what advice they got, but it was a pretty poor situation. And they ended up having to have a 10-year look back period in New York for sales and use tax. And it was quite a project, but, and that, a big part of that was because of the amount of M&A activity they were going through. They were kind of a public company, and it was just a little bit of a mess. That definitely is a common thing that happens. And the common reasons for audit penalties we see here, right? So sales tax rates or rules, right? You're not applying the correct sales tax rate or the taxability determination as far as what the product or service, if that was actually exempt or taxable. And the second one here, the biggest reasons for the big audit penalties you see are going to be the exemption certificate, what I call mismanagement, right? You're not collecting the certificates, or the certificates aren't valid in some type of way. Maybe it's not signed or tracked correctly.
All right. Should we jump on to how do we fix all this mess we just talked about, Eric?
Exactly. I think it's important to talk about that.
Go ahead, Eric. You want to talk to these next?
Got it. Yep. Sorry. Yep. So understand your nexus footprint, right? So it's really important, kind of we talked about before, is the nexus. Well, conducting a nexus study, right? Understand where you have those obligations, where you have economic nexus, where you have physical nexus. And one thing I forgot to bring up, because I think one thing that can sometimes be misconstrued when we talk about economic nexus is, does that nexus, does economic nexus erase physical nexus? Now that there's economic nexus, does it even matter that I have physical nexus? And the answer is yes, of course. They're both equal. Whether you have physical nexus or economic nexus doesn't really matter. You have nexus in the state. Nothing overrides the other. The only thing that does, however, is really what is the first nexus that you created? And that's how far back you have to think about. If you had an employee in a state back in 2001 and you had economic nexus, maybe not a lot of sales there, but you had economic nexus, you already had nexus back in 2001. It didn't really matter that you surpassed the threshold for that state back in 2020. You already had physical nexus there. You had an employee, so things like that you have to kind of consider when it comes to nexus. So conduct the nexus study, talk to a salt firm that specializes in this. Like I said, the firm that I worked on, we used to do deep nexus studies. It's pretty in depth to understand, are there nexus gaps? Have you had periods of time where you might have had nexus and then you had a period of time when you didn't? Things like that are just really important to consider.
Definitely. And that ties to those exemption certificates, because they're exempt businesses who sell to companies that want to be exempt. They'll always tell me, they probably told you this too, Eric, is that, oh, it doesn't matter because it's just, we don't know the state any money anyway. Well,
right.
it counts, that slide Eric showed earlier. So that's why we tie nexus to exemption certificates, because most businesses that sell to exempt buyers kind of ignore these nexus rules. And even if they don't register right now, or they decide not to register, the certificates are still super valid. So next step is,
get registered, right? After understanding your nexus obligation is understanding how long you've had an obligation in that state, and what are your registration options. Maybe it's a voluntary disclosure agreement if you've had a long historical obligation in that state for nexus. Maybe it's just as simple as getting registered. Maybe you reached nexus recently and you need to register then. So the next step is to get registered, to start being compliant. And there's different programs that exist. Streamlined sales tax is a great one that can get you compliant in multiple states, depending on your business qualifications. But yeah, there's definitely, so the next thing is get registered and begin that compliance process.
Yeah, kind of like rip the Band-Aid off, maybe, Eric. I don't know, is that a professional thing to say? But the longer you wait, right, the worse it's going to get. So
it's true. And I think that's one thing to keep in mind. That's a great point, Maria, because it is important you address that quickly. It doesn't go away. And that's one thing that I think companies don't understand is like, well, the further long I go not being compliant means that maybe I don't have to pay that obligation I had 20 years. No, that's going to keep following you, and that'll continue to follow you, and that'll continue to pile up. Really, one of the benefits actually being registered is a lot of states also usually don't look back past 3 years, right? So if you decide to do a voluntary disclosure agreement, which allows you to come forward to the state and say, hey, I need to consider, I want to talk about voluntarily, talking about my obligations that I had for a historical period of time. There's different agreements that states have where they'll not include penalties, they'll include minimal interest, and you pay a limited historical look back on what you owed, usually 3 years, and that's it. But the benefit of being registered also is that typically in an audit, you usually don't go back 3 years. They don't go back more than 3 to 4 years when it comes to an audit. But if you get caught, if you don't get registered, if you don't do a VDA, if you don't start getting compliant, and eventually you get caught, that opens up the door for all that historical time that you had. Remember that client I mentioned a little while ago? That was a 10-year audit period because they had exposure in that state for that period, for those 10 years that they should have been compliant. So if they had done a VDA earlier on and got compliant and addressed it sooner, they would have saved a lot of time and a lot of money than getting caught down the line. And number 3, right? Exploring an exemption certificate management platform. So this is where it's really important, because in order for you to track those certificates and all those challenges we talked about, Maria and I talked about on tracking certificates, the expiration dates, is it signed correctly? There's a lot of validation steps you have to keep in mind when tracking each of those certificates. So it's really not sustainable to not have a system in place to track those certificates. The system in place may be manual, but is that really going to go through, if you go through an audit and one of those certificates was wrong, what kind of Pandora's box does that open up in terms of liability? So it's really important to investigate and invest in a certificate management platform in order to really reach compliance.
Yeah, I agree with you. Again, I deal with this every day in my life, and it is collecting the right thing, which people collect, but are they collecting the right thing? It's making sure whatever you collect is valid. And then it's also maintaining those. And so we're going to look at how to do that. And this can be a platform that can be freestanding, that gives you a opportunity to have an online accessible portfolio. And I'm actually going to take a look at ours here in a few minutes so you can see what one looks like. Or you can integrate with your ERP with a live tax determination with sales tax returns filing. So either way, you definitely want to advise your colleagues to invest in something that works best for them. Before I dive into that, though, I want to go into some common misconceptions. And these are things that I hear every day, and probably things that you'll hear from your clients as well when you start talking about doing a better job of managing exemption certificates. This is my favorite, but most of my sales are exempt, so I don't have to register. Well, as we've just kind of beat this one to death, Nexus laws require to everybody that meets those requirements. And proving why tax was not charged is your responsibility. You can try to tell an auditor that, oh, all my customers are schools. Well, the auditor may accept that. They're human, but probably likely not. If you can't prove that all your clients are schools and have some proof that that sale went to a school, they're probably not going to accept your word for it. And even though it's the buyer who's requesting the exemption, it's going to be you in front of the auditor. So as Eric says, it's just better to get compliance. So we do have to respond to this. Well, I don't need to register. We're in the exempt business. I get this every day. When you ask people about tax compliance, they're like, oh, we don't charge it. We don't have anything to do with it. It's not a problem for us. Well, it actually is part of your responsibility as a steward of your business. Another one of my favorites is, well, we already have a document management system. Well, again, document management is really for just collecting something and keeping a copy. I call it similar to, Eric, like your photos on your phone, right? It's just a copy of something in a file. You may have a date attached to it or alphabetically or something, but document management is not compliance management. It doesn't help you reduce risk. It definitely doesn't communicate with customers. It doesn't identify what is the right document that needs to be completed. It doesn't validate anything. It doesn't have detailed reporting, track data on those images. It definitely doesn't improve customer experience that we talked about earlier. You can't create workflows, and it doesn't make anybody's job any easier. It's just sticking something somewhere. So it's a big misnomer that we have images of these tracked, because remember, it's collect, validate, and maintain. And then along with that, kind of the same idea, this is probably what I hear most often these days, more than document management even, is that we mark the customer exempt in our accounting system and we store a copy there. Well, big problem with that is in most accounting systems, those accounting systems were invented far before Economic Nexus was, and far before we were selling to everybody across the country. So those systems don't have a way to mark a customer exempt just in the states where they've provided documentation. It's typically an on-off toggle. This customer is exempt or this customer is not exempt. There's no way to exempt someone on a state-by-state basis in 99% of accounting systems. You can't, it's a blanket exemption also. Eric mentioned earlier, I got these backwards. Eric mentioned that sometimes things are taxable, sometimes they're exempt. In California, there's a partial exemption. Our ERP systems don't allow you to abide by any of those rules. When you mark them exempt, they're just going to be exempt from everything all the time. And that's not necessarily following the law. And remember, there's 46 tax jurisdictions that have different laws. It definitely doesn't verify at the time of sale. Looks like we have a typo there. Definitely does not verify that you have a document, the proper document on file at the time of sale. And that's what the government wants. Eric mentioned this earlier. You have to prove that you had a document, the right document on file, the date you created that invoice. So if you just check them exempt at one point in time, there's no proof that you had the actual document for their state on file at the time of that sale. And of course, it's very tough in an audit to pull those. When you get audited, are you going to go into every single customer, see if they had a purchase in that state, and then go download those certificates and print them and then hand them a stack of paper? Just think about that. By storing them in your accounting system, there's no way to verify anything. That's a kind of a ridiculous place for storage, because it gives you absolutely no reporting capabilities and no bulk download capabilities, and you don't even know if it was the right document. So it's absolutely not creating a workflow that can help you in an internal or external audit. So with all that bloody, what does an exemption certificate management platform do? So I've mentioned this a couple times, but I just want to talk to you about what it's doing for you. So it's helping you collect the right document for the right reason with confidence. Both your customer and your internal staff don't have to have any sales tax expertise. And then it's making sure that it's valid. It's going to validate that document for you. The technology, as well as teams of people behind these platforms, are going to help you make sure that what you have is audit proof. It is, knock on wood, going to keep you from having any liability coming out of your pocket. It's also going to help you maintain and update those. So this is where automation is really important, because as Eric showed on the slide earlier, about 20% of these certificates actually expire. You may create other business rules that say, I want those California ones that never expired to expire every 5 years. I want to get new ones. So a system like this is going to allow you to put those business rules in place. Also, you have to maintain your customers update. Your customers are changing contact people. They're changing addresses. They're changing things that they might change their name. You have to be able to update that document so it matches the current customer information. I bet, Eric, this is a great place you all could catch people on, right? An incorrect document, right? And that's something we don't think about, right?
It's so
you
true,
have that document, but it was from 1942. It doesn't match the current, right?
Or that company closed, and you need to get a new one. All right, well, that time passed. The company's no longer there, so
Yeah, so automation can really help you with that. And then, of course, there's accessibility. You need to collaborate. We're all in a remote world. We need to collaborate with each other. We need to quickly know if someone is exempt. We need to create orders quickly. So that's what automation is going to do for you. So to quick look at what this looks like, what a tax compliance system could look like. And this is Avalara's. There's others. We don't want you to go there, but this is what Avalara's looks like. So the first box here is ECM, or Exemption Certificate Management, ECM for short. So the first job here is make sure that you have all the documents for your customers, and you request those, and you get them all updated and into a compliance platform. And then you can connect that to a tax engine that will allow you to do that live tax determination that we talked about. You can communicate customer data down here on the in between the first and second column. You can have customer data flowing back and forth. And then, of course, if you're using full automation, you can also have sales tax returns automated through that system as well. So even though you are a company that sells to 100% exempt buyers, this type of system is still wildly beneficial. So a little more detail into what an exemption certificate platform looks like. You can integrate it with other systems. You collect documents digitally. You manage them by state or even by job. We haven't even mentioned that yet, Eric. A lot of times these certificates are specific to jobs, not necessarily the customer. The customer might sometimes be exempt, right? Sometimes not exempt. Right. Where do you track that stuff? I don't even know. You need security. You have important information, tax ID numbers, officers of company. You have important information. This is not something you want in a file drawer below your desk. You need a secure location to store this. You need an automated renewal process. I guarantee you, everyone I talk to goes, every once in a while we look at them. You need an automated, or they never do, right? You need a way to do that, and you need to be able to respond to an audit quickly. And so this is what software can do for your clients. Now, I'd be remiss if I didn't also mention that most businesses that sell to companies that want to be exempt are also purchasing tax exempt, because we're in that food chain that Eric showed earlier, where we're passing sort of the tax responsibility along to that end user. So if your clients are also purchasing tax exempt, you can use the exact same system to create your own exemption certificates and supply those to your vendors the minute you sign up with that vendor. You collect that W-9, you send them your exemption certificate, send them the right form, completely filled out proactively. Most of our prospects say, oh, we just wait till they ask for one. Why are you doing that? Just send it, then you know you never have these, you'll never have an invoice with tax on it when you don't want it. So you can use those systems in both ways. So we have a few minutes left, Eric. I'm going to show the group kind of what this can look like really quickly as we have time. So again, this is Avalara's system. So kind of going through my 3 pillars here, they're in a different order. I have a transactions tab. That's where the sales tax determination would be made. I have my exemption certificates tab. and I have my sales tax returns tab. So these are equal to those 3 pillars that we just looked at. But in the exemptions tab, just to give you an idea, it's going to allow you to collect certificates. So there is an email and direct mail campaign tool built into the software. So as you onboard, you can collect, update, renew certificates. And then you have a look here, these insights here on the right. You have an overview, a corporate overview of how many certificates we are supposed to have. So certificates expected equals all my customers that want to be exempt times their shipped to states. Remember, we need a individual certificate for every state. Even if that's a multi-state form, that's going to count as the number of states that it applies to. So we need to know how many customers we have by state that want to be exempt. And then we have a wheel here that shows us, hey, how valid are these things? Are some of our customers missing? Are some expired? Hopefully your wheel is fully green, but this is to give you an idea what it could look like. I'm about halfway through my onboarding process in my example here, so I'm expecting 3,642. I've validated about 1,700. I still have some work to do, and this is a lot of work, so I do recommend engaging professionals, and we'll talk about that in a minute, to help with that. So you can see your entire database. If we view all of our customers, we can see all of our customers and we can see the certificates that they have. For example, this customer here has given us one for Texas and one for California. We know that it's valid. Neither of those states have expiration dates. We know the date they were received, right, Eric? So we know that we had it on file the day we made that sale, and we can preview that document if we want to. We can see that actual certificate. And we can send them an additional request. So we can queue up an email if we want to send them a request. Say they now have a ship to New York and we want to collect that certificate. We simply send them a new request, which sends them to a portal, which directs them to the right form. They fill it out and it comes right into the system. And the same thing with vendors. We can also create our vendors. So we can add a vendor here. We can upload a list of vendors, and then we can see all of our vendors and all of the certificates. This is great for big purchasing departments because everybody would have access to all the certificates we've provided to this vendor. So I'm having our laptop shipped over to our North Carolina office, Eric. Oh, we don't have an exemption certificate for North Carolina. We need to send them one proactively so they have that one as well. So you can use it in both directions. And then, of course, we're going to keep up with those. And then I mentioned the certificates expiring. It tells you, it knows all the rules in all the states. It has all the forms. So really, it takes the guesswork out of the process for your team. So with that, let's go back to our slides here and just kind of summarize why it's important to improve the whole process. I mean, we've been talking about this for 45 minutes now or so, Eric?
Exactly.
Just kind of summarize all of this. We need the expertise. You need to know that you're collecting and sending the right forms for the right reasons. Your customers, I know that we think that they know what they're sending you. For those of you who've seen these, a lot of times they send you a business license. They might send you other types of licenses. They might send you expired forms. They might send the wrong form. Eric, you probably saw this when you were consulting. People will send you.
Yeah, I've seen that.
Yeah,
They'll
send you anything to try to be exempt from tax, right? They will.
Exactly, yeah.
And your team doesn't have the expertise. And as much as we'd like to think it, they don't either. So give your team and your customers the expertise to give you the right form. Support all the channels. We talked about this, right? We've got to support every channel where you go to market. In the field, online, you've got to be able to capture these and know and make it super easy for people to buy from you. Turn paper into pixels. Dude, I just did dude on a webinar. We've got to get out of the paper business. I talk to so many people who still have these in file boxes or file folders. I mean, I don't know why these are still on paper. We need to collect them digitally. We need to be able to report on them. And we need the organization to have access digitally to these documents, as well as auditors. I didn't mention in my demonstration that you can also create reports, download reports and images, and hand them to people like Eric when you're working with an accounting firm that's helping you. In 30 seconds, you've provided to them an entire list of all the Texas exemption certificates with the date they were received, the date they expire, signatures, images, right? Just like that. So we've got to get out of the paper business.
Yeah.
And technology, I've talked a little bit about this. I really didn't go into the artificial intelligence and the OCR, the optical character recognition that's built into technology, but take advantage of the latest technology as well. That Florida form that Erica was mentioning, the standard state forms, so I think Washington has one, several states have a standard issue form. The system can read those. It can read that information off that form and capture the data on it. Why are you doing this? Let the technology help you be compliant. And then, of course, you want to improve the experience for everybody and take the risk out for both of you. So,
And I love that. I mean, technology aspect of that. I mean, I was here as early as cert capture when we had that originally. So now I've just to see how much advancements the platform has made, and especially in AI and
right.
OCR capabilities. I mean, it's really amazing, right? And a big part of that, what made my life easy as a customer, right? I'm not for Avalara back when I was when I was consulting, was it just really, yeah, you're right. Being able to provide those certificates and be able to have all that information, it's just really at an audit defense, it's honestly a blessing and time saved for my clients as well.
Yeah, it's funny because people will tell me a lot of times, oh, yes, we had a sales tax audit. It took us like 9 months and we only ended up paying X amount of dollars, $5,000 or something. But they never count in the time, the labor that their team spent and the business interruption for them and their customers that they spent during that 9 months. They didn't add that
Right.
up. They were somehow okay with the $5,000 invoice, but they don't do that math of all the time and effort and energy. And sometimes you're bugging your customers, right? You had to call customers and go, quick, give me a certificate, for that $10,000 order.
Exactly.
So yeah, it's silly what people will deduce in their minds because you don't do the math on paper of what this stuff can actually cost you in time and effort. So lastly, I'm going to leave you with, this is something I've developed over time. I do a lot of training for a lot of our partners and our reps. And these are questions that you can take back into your practice and they'll kind of spur the conversation with your clients when you're talking about exemption certificates or just sales tax in general. Because a lot of times if you mention sales tax, the answer is going to be we don't charge it. And your tendency is to go, okay, what else should we talk about? Income tax? But we need to dig a little deeper in. If they don't charge sales tax, they're probably having to collect exemption certificates. Either they are and they've messed it up, or they're not bothering to. I talk to businesses every day who don't collect anything. So you want to dig a little deeper into their business and really what they should be. Is that current process scalable? Are you going into different markets? What's the quality of what you have? Where do you store them? Do you also purchase tax exempt? So this is a good little cheat sheet that you can use in your practice to stir conversations with your customers around getting their whole business compliant, because it's not just the tax rates. That's really the tip of the iceberg. There's a lot of things underneath that iceberg that have to do with sales and use tax compliance. Eric has lived his whole career. So, yeah, with that, I'm not sure if we have any questions from the audience, but I'll stop there.
Great. Yeah, no questions. Do you want to tell people how to reach you or get a hold of you? If they need,
Absolutely. So we have special accounting partners and accounting team that work specifically with our accountant friends. You can become a partner. You can just ask us questions. You see that web link there, avalara.com/accountants. That's on our website. A ton of information there for you. You can ask us questions. You can refer customers to us. We will do consulting calls with you to talk about sales tax or exemption certificates. So we partner with accountants wholeheartedly every day. So I'm happy to help you out in your practice in any way we can.
Great. Thank you both so much. That was a great webinar. And I just want to remind people that if you want to earn CPE for this webinar, look out for an email in the next few days. That email will have a link for you to take a short quiz where you can earn your CPE certificate. And again, thank you so much to all our attendees for a great webinar. And yeah, hope everyone has a great day.